Hey everyone, welcome back to Fair Value Study. Today we are looking at the world's most valuable company, Nvidia. Ticker, Nvidia. At over $5.7 trillion in market cap, the big question at $225 a share is simple. Is this stock still a buy or have we already missed the ride? Let us break down the updates, the fundamentals, and what Wall Street is doing. This week was a complete rollercoaster for Nvidia holders. CEO Jensen Huang traveled to Beijing alongside President Trump for a high-profile summit with China's President Xi Jinping. Markets initially rallied on hopes that Nvidia might resume H200 chip sales to Chinese tech giants, sending the stock to a brand new all-time high. Then came the cold water. Reports indicated no actual chip sales were made, and it remains highly uncertain if China will even permit its companies to buy Nvidia chips over domestic alternatives. That news triggered a 4% pullback. But step back and look at the bigger picture. Nvidia is still up 20% in the last month alone, and 27% year to date. And the biggest catalyst of the quarter is happening in just 4 days. On May 20th, Nvidia reports its Q1 FY2027 earnings. Management guided for $78 billion in revenue, and given massive hyperscaler spending right now, there is a very strong chance we see another beat and raise quarter. Now let us look at the numbers, because this is where it gets interesting. Nvidia's trailing 12-month EPS is $4.93, giving us a trailing PV of 45.7. That sounds expensive, but because earnings are growing so fast, the forward PV drops to around 25. In fact, the single most important metric on the board right now is the PEG ratio, which sits at 0.71. Any PEG ratio below 1 implies that you are buying hypergrowth at a very reasonable price. Of course, it is not all clear skies. The price-to-book ratio is elevated at 36.4, and the 14-day RSI is hovering around 72. That puts the stock in technically overbought territory, signaling a need for caution heading directly into earnings. However, Wall Street institutions are pushing targets higher. Wells Fargo just raised its target to $315, Bank of America went to $320. And the consensus is a strong buy with an average target of $278. So what is the bottom line? Nvidia is definitely not cheap by traditional standards, but it remains the undisputed backbone of global AI infrastructure. The China restrictions and the overbought RSI are real near-term risks. But that PEG ratio of 0.71 tells us this is still a fundamental growth story, not pure speculation. All eyes are on May 20th. That is the Nvidia picture for today. Remember, this is for educational purposes only, not financial advice. Do your own research. Thanks for watching, and I will see you in the next video.